Hello, guys. Welcome to your market report for this Wednesday, the 12th of September, 2018. And we're going to talk about Italy. We're going to talk about Italy's banking sector first, before we get into the rest of the markets. And the thing is Italy's a mess. Honest to gosh, it's a mess. Their bonds, why I'm looking at Italy right now is their bond on the U.S.-Italy government bond 10-year, the yields are starting to rise. They're past 3%. They're heading toward 4%. And this is going to have an effect on the banks. So let's start the charts right here, and let's take a look at this. Let's pull our chart in so we can see it better. Now, these are the Italian government 10-year bonds right here. What we're looking at. I hate these pages flipping down. It says currently Italian banks rely on sovereign debt as the basis of their first-tier capital requirement to meet regulatory thresholds, as well as protect themselves against unexpected losses. For the country's two biggest lenders, UniCredit and Intesa Sanpaolo, the Italian sovereign debt constitutes a whopping 145% of their Tier 1 capital. So, Italian sovereign debt constitutes 145% of their Tier 1 capital. And the top six largest lenders, Banca Monte dei Paschi di Siena, Banco Popular, and UBI Banca. The Banca is the name for bank, I think, or Banco is bank, I mean, in Italian. Banca National di Lavoro, also included, still have 143 billion euros worth of Italian debt securities on their balance sheet, which is more than 137 billion of debt that systemic banks in the rest of Europe combined hold. So the Italian banks here have 143 billion worth of this debt. The debt is their capital. It's debt, and an awful lot of these loans are non-performing loans, means they're never going to be able to secure that money. So basically, they're bankrupt right now, as it is, and it's getting harder and harder to borrow money in Italy, because look at these government bonds and the yields on these bonds passing 3% on the U.S. 10-year on Italy bonds, Italian bonds. Now you notice all through 2016. 2017, these yields were remaining down around, they were down around 1%. 2016, they're 1%. Now they're 3% and rising toward 4%. This whole thing in Italy could become untenable because the government is looking at it says, I'll read right here. It says, this is mainly prompted by concerns that the government will soon adopt a policy of fiscal expansion that many consider to be irresponsible. And the reason why is because Italy, the people are fed up. So basically what it boils down to is the Italians have brought a new government in, and they want that government to give them goodies. And this is fiscal expansion, they call it. That's the name for giving the people goodies in order to pacify the people, because the people have been under all these years of austerity, and they're just about pulling their hair out with this austerity. They don't want it anymore. So the government's promised them the good life, and this physical expansion means the good life. And other countries, they say, well, where are you going to get this money from to give them the good life? And so there we go. We go in a circle here, and this whole thing could blow up in the world. Italy is probably the first place that's going to blow up. So now let's take a look and let's get into our regular market report. Let's take a look at Bitcoin. Bitcoin today, 6250. That's what we're looking at. I got bad news about Bitcoin for you Bitcoin enthusiasts, and I like Bitcoin too, and the cryptocurrencies in general, is I think that this Bitcoin is setting up for a downward turn. That's my opinion on it. I've shifted my positions. I think there's a higher percentage chance for a downward turn in Bitcoin than before. And what's made me think that is we're going to go to cryptocurrency market capitalizations right here and take a look. And we're seeing a couple things that are pointing toward Bitcoin getting ready to take a rather large tumble in price. First off, the market cap's dropping. And it's not dropping because Bitcoin is dropping. It's dropping because the altcoins are dropping. Take a look at Bitcoin dominance at 57.8%. That dominance is rising, and the reason why it's rising is because the altcoins are falling. We see the altcoins, some of them are down like 10% or so. Litecoin down 9.37% to 48.71, and a lot of them are down substantially. Bitcoin is not down substantially yet, but this is a signal. This is a signal that Bitcoin is getting ready to drop below support, I would say, in my estimation. But we're going to have to wait and see. But that's what it looks like to me. Now, for you guys out there who are getting scared and saying, hey, you know, Bitcoin's going to drop to zero. I heard some guy say it was going to drop to zero and it's going to be worth nothing. That's a bunch of baloney. That Bitcoin's going to drop to zero when the price of silver drops to zero. I mean, you know, there's guys out there that say silver's going to go to zero. That's a bunch of baloney too, you know. It'll be all gone before it ever gets to zero. That's when I'm talking about silver. Let's take a look at silver today. Silver's at 14.09 today. It's down 3 cents. We had this spike downwards in silver price. Went down below $13. It went down to it went down into the $13, as I should say. It went down to like $13.92 or something like that. It rebounded back up again, but it's very low right now at 14.09. This could be the calm before the storm. And what I mean by that is if they keep suppressing this price down lower and lower in the end, I think the physical is going to run out. The physical that's available for sale, that is. Now, there's lots of physical out there. Physical silver I'm talking about out there. There's tons and tons and tons of it. But it's not available for sale. And, I mean, J.P. Morgan alone, he's got a massive silver hoard of physical silver put away. But he's probably the biggest stacker on earth. But he's not going to sell at these prices. Are you kidding me? He was accumulating back when price was like $20. He ain't going to sell at this price. And also, when these bankers accumulate like that, it's because they got a tip. They know what's going to go on. It's just like a guy that say he's a jockey, say he works at a jockey at the horse racing place, you know. And if he puts a big bet down, you can bet for sure he got a tip, and he's going to win, and he's going to make a lot of money, you know. Well, that's the way with this. They know what's going to happen, and that's why they've accumulated these long positions on this silver. J.P. Morgan, you know, he knows what's coming, and these guys, they don't play the game unless they're going to make at least 10 times. You know that, and so this thing could be getting ready to turn and go the other way and make J.P. Morgan his 10 times. If he's paid $20 for the silver. On average, cost averaging it, he's probably paid like $20 or $18 or something like that. He ain't going to sell it $14. He's going to sell it $200. So the best thing for you to do is sell when he sells and accumulate when he accumulates. And believe me, he's accumulating right now. That's the only thing that's keeping the silver price up at $14. Probably would be down around 12 right now if he wasn't accumulating like crazy. It's us guys out here, us middle class people that always end up getting the short end of the stick. You know, while while J.P. Morgan and his buddies laugh all the way to the bank. And if you're not watching what they're doing, if you're watching what they're doing, sometimes you can catch a little break. You know, maybe this is one of those breaks. Anyway, let's move on to the Dow Jones Industrial Average today. We're looking at up 113 points. This is just pure garbage, and anybody who's buying into it at these prices is buying garbage. But if that's what they want to buy, let them buy it. You know, but I believe that this market's coming up for a big fall once the bond rates hit a certain height. And until then, this market's probably going to maintain some a head of steam. It's probably going to keep going until the bond market reaches a certain point. So let's take a look at the crude oil today. $70.15 today. Now it's crossed the $70 mark. And I notice some entity, probably OPEC, is keeping the price between 65 and 70. They're probably working together with Russia, you know, to keep that price there at a certain price point, along with China. They're all working together on it. And 65 to $70. So now you see it touch 70. It's probably going to go back down a little bit now again, because it's reached its high water mark, you know, or high price mark. Let's take a look at bonds and rates today. Shows bond yields falling off today. That's what we're seeing here. But how much are they falling? Well, they're falling quite a little bit. 1 basis point, or almost 2 basis points. Yesterday they were up 3, I guess, and today they're down almost 2. So they're yeehawing up and down these rates and the bond yields. I've been expecting them for quite a long time to move upwards. But they're staying doggedly down, you know. The yield curve is flattening, and so that's what's happening in the bonds today. Now let's take a look at the U.S. dollar index. 95.09. The dollar's staying fairly steady. So that's what's happening in the markets today. Thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye-bye, guys.